So, what are candlesticks? Candlestick charts are used by traders to determine possible price movement based on past patterns. So, if we look at a chart, we are going to be seeing specifically if you set up your trade chart in this manner, you're like we covered in part one, you're going to be seeing something like this for candlesticks, right? So you'll have, depending on the platform you're using, some platforms are going to use a red and green colors, others are going to use a blue and purple, or in this case, this picture has it as black and white. But the general idea is that if your candle is green, it means that it had a opening price down here and a closing price up here with so the bottom of the body of the candle is the open price, the top of the top of the candle, the top of the body of the candle is your closing price, and then we have two wicks. Now they can be called shadows, sometimes they're called wicks, but two wicks above the body of the candle or below the body of the candle. Now, some of these could be really long, other times, as we'll see, they could be really short, but they identify what the lowest price of the day was and what the highest price of the day or time frame that you're looking at for a green candle, or in this case, a white candle. A black candle or a red candle is identified by a bearish candle. So green would be bullish, a red candle would be bearish, meaning that it closed under the opening price. So as we can see here in a red candle, or in this case a black candle, the top of the body would be the open price and then the bottom of the body would be the closing price. With the wicks signifying the same thing, the top wick, the highest price that is sold during that day, and then the bottom wick, what the lowest price of that day was. So this tells us a lot of information regarding what happened during a specific time frame. And because it's telling us some specific information during a time frame, we're going to be able to use that to determine patterns. All right. So to continue on the points, candlesticks are useful when trading as they show 4 points, four price points: open, close, high, and low. So open, close at the bottoms and at the tops of the respective candles, and then high price and then low price. Through the period of time the trader specify, right? So if I'm looking at a day chart, so for example, let's jump over to a chart. So if we're looking at a weekly chart, right, I am going to be seeing this candle right here. So let's look at this candle right here. We're looking at the open price and the close price, the highest price and the lowest price for that week. If I were to change it to the day chart, now I'm looking at the same candle, or a candle that opened down here, it closed up here, and then it has a high price and a low price in terms of its wicks, right? But that's for that specific day. So everything is going to be relative to the time frame that you're on. If we're looking at 4-hour candles, they'll look something like this, and then I could identify what the price ranges were during that time frame, whether it be a green candle or a red candle, for that 4-hour time period. If I look at a weekly or a monthly candle, then this is going to tell me the price action for the entire month. All right. And that becomes relevant once we start going into patterns. Do you want to add something to that, Nick?
Yeah, also, if you can go back to that chart,
Yeah.
something to note real quick, depending on the trading software you're using, sometimes you'll see either like a floating box, or in this case, at the very top of the chart, you'll see a line with like a bunch of the numbers. And if you hover over a particular candle, it'll give you the open, close, high, low for that specific time frame too. So you don't have to like play with every pixel to figure out like what was the closing price or whatever. So it's kind of like a nice little shortcut on how to figure out those numbers.
Yeah. I don't know if you guys see it, but up here, this would give us our most active one right now. But if I were to hover over this specific one, you see how it changes. So it'll be your open, your high, your low, and your close of this candle. All right. So that's a great thing to keep an eye out on. So let's go back over to the presentation slideshow. Trading is often trading is often dictated by emotions, which can be read in candlestick charts. So that's a beautiful thing about candlesticks, is that because, as we covered already, trading is mostly an emotional sort of endeavor. It's an action that you try to be as rational as possible. We all assume other traders are rational, but the reality is a lot of traders are trading on emotions, whether it be an emotion, they're selling off because they think the prices are going to crash, or because they're making an emotional decision to part ways with a specific uh, trade or action, or stocks that they bought because they no longer think it's going to be profitable. All of that is sort of read into or cooked into these charts based on this, on the candle patterns, right? Candle patterns are sort of a way to quantify this emotional reaction that people are having. So that's very, very cool. Like I mentioned early, candlestick patterns are divided into two categories, so bullish and bearish. So what you'll see now, when we go over it, is I sort of divided them up into a bullish specific pattern and then a bearish specific pattern, because candlestick make price patterns. They help traders determine short-term price action. So most of the times you will be using candlestick patterns, as you saw. So if we go back to our trade view here, if you're looking at a day, or if you're looking at, say, even a week, I would say, you know, if we zoom in and we're trying to figure out at what point we're going to buy, this information here is not going to tell us, what 6, 7, 8, 9 months the stock is going to do, or the, in our case, Bitcoin is going to do. What it will tell me is where the potential next point of price action, or where the next point of buy or sell pressure that's going to happen, that's going to help me determine whether I am going to enter the market, buy, or where I'm going to exit the market, sell. It's not going to tell me what the performance of the stock is in 10 months, right? TA isn't necessarily meant for that. You could take a guesstimate, right? But it's hard to take into consideration through these charts, black swan events, say, Ukrainian war, or that'd probably be the best example. Or, for example, 9/11, right? These are events that we cannot account for. And therefore, we're not able to say, with certainty that, oh, the price here would have kept on going up. We don't know that. It could have gone down regardless of the fact that something was happening for various different reasons. So, price action, or looking at candle charts, it's relevant that you keep in mind that this is for short term and not necessarily long term, right? You're trying to find and identify either an entry point or an exit point. You're not going to be able to determine some long term actions. Now, you can look at stuff like in the monthly chart and say, okay, well, over the last 3 months, it has been doing pretty good. It looks like it is continuing to be on a trend, an upward trend over the last, 2 years. Therefore, I could estimate or guess that this trend is going to continue over time until it no longer is, right? So candle patterns are going to give you some perspective, but they're not going to tell you where it's going in the future. But it will make it easier for you to stack the cards in your favors to determine when it's a good buy point and when it's a good sell point. All right, I just sort of want to cover that because there are limitations to what these charts are going to be able to tell you.